first, some breaking news coming in, and that's related to the Reserve Bank of India. RBI has announced a 2.1 lakh crore rupees dividend to be disbursed to the government, and this is for FY24. Now, what is important to note here is that this is the highest that it has ever been, with the same for FY23 really coming in at 87,000 crore rupees. Ankur Mishra, my colleague, is tracking this very, very crucial story for us and is now joining us now live. Ankur, so this dividend is the highest ever payout that has been distributed till date, just ahead of government formation. Coming in as it does is surely likely to give flexibility to the government in terms of spending. Do put that in perspective for our viewers.
Yes, definitely. Now that Reserve Bank of India has decided to give highest ever dividend to the government in the board meeting which was held today, it is definite that the new government, whomsoever comes in, will have more legroom for spending. And remember, if you talk about the dividend transfer which has happened over past 5 years, it was 87,416 crore last year. Before that, in FY22, it was 30,307 crore. Before that, it was close to a lakh crore. And if you talk about FY20, it was 57,128 crore. And in FY19, when this all concept came in, the total transfer was 1,75,988 crore. But more important and more pertinent question is, what will be impact of such a step which has been taken by the central bank? To discuss this, we have very important guest with us, Kanika Pasricha, and also former Deputy Governor of Reserve Bank of India, R. Gandhi. First of all, I want to come to you, Kanika, because you almost got it right, but still, it was almost less than a double which you would have predicted.
Hi, thank you so much. So, frankly speaking, yes, you're absolutely right. While we stuck our neck out and gave a number, much more than budgeted at close to lakh crores, the numbers has also surprised us much more on the upside. So, a very positive number. Budgeted number in terms of dividend for RBI plus PSU banks plus financial institutions was 1.02 lakh crores. So, even though we are not even including the dividend payout by banks, this number itself is actually showing a very strong revenue or a funding source from budget perspective. So very good number. Thanks.
Okay, we also have a former DA, Mr. R. Gopalan. Mr. Gopalan, I want to understand from government point of view, do you think it will give more headroom for government for spending? And also for FY25, the budgeted target was around 1 lakh crore, which is likely to be revised in the budget, which is going to be presented in July.
Yeah, I think this gives a good elbow room to government to do two things. One is to accelerate the reduction in fiscal deficit to little higher than what they have promised, because they have a huge gap in 2 years to cover. And 0.7 or some such thing they are looking at each year to reduce the fiscal deficit by. And secondly, it will also give more money for expenditure programs of the government.
Let's also get regulator's point of view, who has himself been in this position. Mr. R. Gandhi is there with us. Sir, welcome to the show. My question to you will be, now this expectation which was there in the market was around 1 lakh crore. It has come double of that. Why it would have happened like this? What is the calculation which market missed?
Okay. It is all based on the framework, the economic capital framework, which has been agreed upon, as you mentioned, 3-4 years before. So, and as per that, the calculation have been done based on the Reserve Bank's balance sheet. Last fiscal, the Reserve Bank balance sheet has expanded from 31 lakh crores to 33.5 lakh crores, and of which a major portion is in the forex assets. So forex assets last year, the returns have been quite high. That's because typically forex reserves are invested in securities of U.S. government or other important foreign governments. So where the returns, interest rate returns and other capital returns which Reserve Bank must have enjoyed during the year must have been quite large, because we do not have right now the P&L of Reserve Bank of India, which will come along with the annual report. But indirect indication thereof is in the balance sheet figures which Reserve Bank has published on its website. So there, when we will look at the other liabilities, that is what is the income accrued, that is net of expenses, that gets added into the other liabilities portion. That has got a very big jump last year. So it increased from from 13.5 lakh crores to 16.5 lakh crores. 3 lakh crores of rupees extra that was accretion into the other liabilities, which include the income net surplus. So that way, the last year, obviously, Reserve Bank has enjoyed quite large surplus. That is why, and after factoring in the highest possible economic capital framework under that 6.5% Reserve Bank has retained, then the remaining surplus, it is bound to transfer to government. So that way, it had come out now that it will the 2.11 lakh crores of rupees transfer have been arrived at. So it is all based on the actual net surplus Reserve Bank has got and how much it has retained for its increasing its reserves, and the net surplus is transferred to government.
One more question, Mr. Gandhi, that contingency risk buffer has been kept at the extreme end. Now this is different what happened last year. What do you make out of this situation which has been decided by Reserve Bank of India?
Earlier also it has been clearly mentioned that the range which has been assigned to as per the formula, it is between 5.5 and 6.5, and the years when the income has been good, then possibly the underlying implied assumption is that Reserve Bank will retain larger part of the surplus as reserves. That's what has happened. Last year it has retained 6%. It has reached 6%. This year it has reached 6.5%. Previous 2 years before it was 5.5%. So as the income increases, then its capacity to retain additional part of the surplus as reserves has happened, and this year also it has happened.
Mr. Gopalan, I want to come to you next. Now the government has got more than what it would have wanted. What kind of difference it will have impact on the policy measures which will be there from government now? And also, as far as the spending of government is concerned, which are the sectors which you think will have an impact?
Can I make one or two comments which following up Mr. Gandhi made? You see, the 6% last year was 3,80,000 crores was the ARE, available realized equity, last year. This year it will go up by another about 55,000 crores this year. More than that, on the currency and gold revaluation account, they must have got more money. Then they would have got my investment revaluation account, foreign securities, they would have got more money. And they would have got more money income on foreign exchange forward contracts. That also they would have got more money this year. And on top of it, with all this, and after providing for and having a buffer 6.5, which is available realized equity, now if RBI has transferred 2.11 lakh crores, possibly they might have had a very good income from the sources I have just mentioned. Until we see the accounts, we will not be in a position to know exactly what it is. Mr. Gandhi may confirm what I said. On the policy side, yes, look, there is a limitation on the capacity of the government to spend on certain sectors. Now, 2-3 things will have to be done. One relates to enhancing the capacity of government to spend, especially on infrastructure. We are doing more on capital-related investments. Can we not go into more, other than capital-intensive investment, can we not go into that? That will provide more employment, durable employment to people. So can that be done is one question which government will have to ponder. And Now we have got a good amount of work to be done both on education and health. On this, both in insurance sector, in enhancing productivity in agricultural side, and enhancing the educational capabilities of the children. Children at the 5th standard can't do sums in 2nd standard or something. Those kind of quality-related issues. Plus, on the skill development side, which government could focus on seconding people to running industries, existing industries who are running, to second people to those and get them trained there. An apprenticeship program to improve the volume and the width of that. If government can focus on them, that will have a durable impact on the economy as we go along. I think government has now an opportunity, based on what RBI has provided, government has an opportunity to go forward to attempt doing all these things.
Right. Kanika, I want to understand from you, the market has reacted. You would have seen bond deals reaction after the announcement which is made by Reserve Bank of India. What do you think will be the level it will settle for as far as bond deal is concerned? And also, banks will have a windfall gain due to it?
So first and foremost, when you talk about market reaction, what's very important to note is that, yes, in the short term, we have seen yields, the bond markets rally, but the exact impact on the end of the curve, especially at the shorter end of the curve, will be determined by impact on liquidity from this RBI dividend number, which happens only when the government starts spending. At the current juncture, the RBI has transferred that money to the government balance sitting with RBI itself. It will get converted into liquidity when government starts spending, and that may happen with a lag given that elections are underway. It's a special year that we are in, where a record dividend has been provided. So impact on the shorter end of the curve may happen with a lag, but impact on the longer end of the curve, especially in the tenure that we have seen, yes, you're absolutely right. It is attributable to expectations of a much better fiscal deficit number may be provided by the government in the budget, in the final budget, or as per recent sources, the discussions around reduction in borrowing calendar for dated G-Secs, as the government has done already for T-bills, recently, last week, Friday, when we got the news. But our point, which we would want to make over here is, see, the government today has two choices. One, to reduce fiscal deficit further from 5.8% of GDP in FY24 to 5.1% budgeted, and a lower number may be announced with this bumper dividend. Or the other alternative that you've also discussed with the other panelists is, they may actually increase the capex plan, which was announced at 11.1 lakh crores, 11.1% growth for FY25 over FY24. Maybe a higher number can be announced in the final budget, which is the need of the hour, as announced by Prime Minister himself in the RBI 90-day speech as well. So the second option looks more viable from an economic framework perspective to us. Thanks.
Right. Thank you so much for joining us and explaining this part of the impact of the Reserve Bank of India's decision to transfer record dividend to government. Over to you, Sumita.
Yes, thank you, Ankur, and thanks to all our panelists for getting us all of those details and perspectives in terms of what this record payout dividend to the government by RBI really means. We'll have to just wait and watch for the next couple of weeks to really see how that is really budgeted in the upcoming budget and whether it will lead to any liquidity, and most importantly, it will add on to the government's capex, but how will it be really deployed by the government in terms of policy allocation? So that will be interesting to watch out for, and also the impact on markets. And speaking,
if you like this video, then like, share and subscribe to ET Now.